Okay, hi everyone. So today we're going to touch on company basics. Yeah, so this is a very elementary video, which I'm just going to run through pretty quickly. So this is actually for all company officers and company shareholders who should know all these points and all these roles and responsibilities. Yeah, so if you're setting up a Singapore company for the first time, or if you already have a Singapore company but you're not too familiar with the functions of it, then you should be watching this video. Okay, so let's start. Okay, so generally there are two types of private companies. There's a exempt private company limited by shares and private company limited by shares. So the difference is the exempt word there. So if let's say you have corporate shareholding, which means that if another company is a shareholder of this particular company, then you lose the exempt status. Also, if you have more than 20 shareholders, you will also lose the exempt status. So if you lose the exempt status, then you're held to a higher degree of audit requirements for your financial year. Essentially, one of the most important differences is that you will actually have to file your financial statements in XBRL format, which is Extensible Business Reporting Language. Yeah, so let's touch on these few topics. So we'll touch on roles and responsibilities. We'll touch on the Constitution and Companies Act, the shares, ACRA and IRAS compliance, keeping accounts, and how to employ people for the company. Okay, so for roles and responsibilities, we'll look at shareholder or member responsibilities. So if you're a shareholder, loosely exchangeable, sometimes we deem shareholders as members and members as shareholders. So if you're a member of the company, which means that you actually subscribe to the company's constitution or the memorandum of articles and association, and then generally shareholders or members, we use them interchangeably. Then the officer of the company, the most important is the director or directors. Then there's usually a company secretary. Okay, so the shareholder or member, right? The shareholder and member is actually the person who puts in money to invest in the company. So if let's say the company is formed, you actually imagine the company as a living thing, although it's a non-living thing. So imagine that the company is actually formed, then it needs money to run. So for day-to-day operations, the company will actually ask for people to invest in it. So to run the company, maybe the company may need, let's say, 10,000 Singapore dollars. Then you put up a notice saying that anybody wants to invest in the company, please subscribe to my shares. I'm selling shares for perhaps 1 Singapore dollars per share. So if I need 10,000 Singapore dollars, I'll be selling 10,000 ordinary shares for $1 each. So a shareholder will be the one who says that I think the business plan of the company is pretty sound, so I want to invest in the company. So they'll put in the $10,000. Then the company will use this $10,000 in its day-to-day running. Hire people. Maybe the company will hire a director, pay the secretary, pay the admin staff, all through this $10,000. So that's how shareholders come about. And shareholders, they're not supposed to be disturbed. They are literally something like, put money and then wait for returns. So every year, the responsibility of the shareholder is to attend the annual general meeting or any extraordinary general meeting that is required. So the shareholder is not involved in the day-to-day running. So there are a lot of instances whereby company directors who are involved in the day-to-day running complain that shareholders are impeding their ability to run the company. So the directors are the ones who are involved in the day-to-day running. So if let's say open a bank account, find an office, hire staff, these are responsibilities of the director, not the shareholder. So the shareholder can always ask the director to maybe or recommend certain actions to the director, but the director doesn't have to listen to the shareholder. So if the shareholder wants to change the director, no problem. You can actually make changes at general meetings, which means that if you go to a general meeting, like you go to an annual general meeting or extraordinary general meeting, you can actually pass a resolution to remove a director and appoint a new one. And then, of course, the hiring of the secretary is actually the responsibility of the director. So the shareholders can appoint the directors can appoint the secretary. So So the director will appoint a secretary. The secretary is actually there to assist the director in the day-to-day running, advise him or her as to what they have to do for compliance matters with regards to IRAS and ACRA. Okay, so these are the important three roles. Just remember shareholders, directors, and secretaries. So the shareholder and director may be the same person, but essentially I always tell people that just remember that shareholders are shareholders, directors are directors. Shareholders are supposed to be people who put money, and then they are only to be disturbed in general meetings on certain decisions. Okay, so if something goes wrong with the company, right, the director is actually liable. So please take note that yeah, although you engage a company secretary, but your company secretary can, like for us, I'm sitting as a company secretary for quite a lot of companies. So sometimes I tell the director that you have to do this and that, and then if the director refuses to adhere to my advice, right, at the end of the day, when ACRA or IRAS comes down on the company, they will ask the director to answer. The director can't say that, the secretary is supposed to take charge of this. The secretary, like for us, we can assist in the day-to-day running, but the director is responsible in adhering to all these deadlines and rules and regulations. Okay, so next right is the Constitution and Companies Act. So Constitution or Memorandum and Articles of Association. So the Memorandum and Articles of Association has been merged to form this document called the Constitution. So a lot of people actually they contact us and ask us what can and cannot be done to the company. So they tell us, oh, how do I maybe sell shares to someone? How do I appoint a director? How do I do certain changes to the company? And I always tell them that it's not the same for every single company, because I need to see your constitution or your memorandum and articles of association, because the document will actually tell me how your company is to be run. So certain changes that you want to do to the company, right, you have to follow this rule book of the company. And in most cases, most companies will use the model constitution. So what you can and cannot do in the manner in which a company transacts business is in these two documents. So the Constitution and Companies Act. So you can change your constitution, because constitution is unique to every single company. So a company can actually change and tailor the constitution to help it function. But the Companies Act, right? The Companies Act is a act that governs and covers all companies in Singapore. So the Companies Act in Singapore is something that all companies have to follow. So if let's say you're a director, you're a secretary, you're a shareholder, you want to understand what documents you need to understand, you have to understand the Constitution and the Companies Act. So Constitution it can be unique to your company, but the Companies Act, right, is the same. So there is only one Companies Act, but there can be so many other constitutions because different companies have different constitutions. So for shares, so a company must have money for day-to-day operation, like what I mentioned. So the shareholders, they actually invest in company shares in exchange for future profits. So how you get future profits, right, is that normally dividends are issued out to shareholders. So if the company makes money, then the dividends are actually issued out to shareholders. So the shareholders pay for the shares by paying directly to the company's bank account. Okay, if you subscribe to shares, which means that the company issues new shares. If you want to subscribe to shares, you actually have to pay the company, not pay anyone else. So there's a lot of instances whereby we see company monies being intertwined with their personal, like maybe shareholders' monies or directors' monies. You can't do that. So if the company needs more money, it can issue new shares. That's actually what happens to companies like maybe Grab or Uber. So Grab or Uber, they actually have funding. So what they do is that they maybe call for funding of maybe like example, maybe 10 million. So this 10 million, right, they use to run the company. So as they run the company, they incur expenses. Then as they run the company, they also gain revenue. But if you know, like Uber and Grab, they are spending more money than they are making. So every day there's a deficit. Then after a while, the company bank account is left with almost nothing. Then they will call for new investors. So new investors will actually come and invest in the company, so the company will issue new shares. That's how you get funding to top up the company bank account. Okay, so the company must have day-to-day money for day-to-day operations. Then that's how you get money. So the company sells shares in exchange for money. And one thing to take note is that ordinary shares versus preferred shares. So there are different type of shares. So ordinary shares typically allow the shareholders to vote, but preferred shares typically they can't vote. So typically they can't vote. So what happens is that but the preferred shareholders normally they will get first claim if let's say the company is liquidated, then the preferred shareholders will get the payout first from the liquidated monies of the company. Okay, so meetings. So I mentioned previously, so there are meetings when you want to run the company, right? There definitely will be meetings. So the directors are the day-to-day people who run the day-to-day of the company. So the directors meetings, right? Let's say you want to change address, or you want to maybe open a new bank account, hire a new secretary. These are director meetings. So normally we will have a director's resolution from a meeting. Then the shareholders meetings are only called for certain matters. So take a look at the constitution to see what is required for shareholders meetings. So the only compulsory shareholder meeting is actually the AGM, or the annual general meeting. And the annual general meeting is to be called. There's a deadline. So your financial year end, once your financial year end is up, you have you have 6 months. Sorry, you have exactly 6 months to call for an AGM, and then after you hold your AGM, you have 1 month to file your annual return. So then every other shareholder meeting is called an extraordinary general meeting. So if let's say you want to issue new shares, you want to sell shares, somebody wants to sell shares to someone else, then they do it through an extraordinary general meeting. Okay, so we will actually cover how to hold extraordinary general meetings or annual general meetings at a later video, and also we will talk about directors meetings. Okay, so you have two government bodies to actually take note of. One is the Accounting Corporate Regulatory Authority, so the ACRA compliance. It's actually the maintenance of company registers. So there's actually a requirement for companies to maintain company registers. So like, who are the nominee directors, who are the directors, who are the secretaries, who are the beneficial owners, the controllers. All these are all company registers. You have to put in the company register. So there's a AGM requirement. So every company has to hold an annual general meeting every year. So after every financial year end, you have to hold an AGM. And once you're done with your AGM, like I mentioned before, you have to file your annual return. So you have to inform ACRA that you have completed your AGM and everything is okay. Then you file your annual return. So normally the company secretary will assist in that. Okay, but just remember that if let's say you don't file your AGM and you don't do your AGM and you don't file your annual return, the onus is actually on the director to answer for it. So we have many cases whereby we have clients who just don't really bother about all these compliance, even though we've called them, tried to call them, tried to contact them through email, whatnot, and then they just don't comply. So at the end of the day, right, yes, you may have a secretary, but the director still has to respond to it, to the disciplinary action if let's say ACRA deems that the company is out of order. So that is with regards to ACRA. Then you have another body called IRA. So it's the Inland Revenue Authority of Singapore. So the IRA's compliance, right, you need to file your ECI, your estimated chargeable income, and then you have to file your corporate income tax. The e-filing deadline, which is to do online, is 15th of December every year. I don't think it will change. So these are the deadlines that you must take note. So what happens is that if you close your financial year, like for example, if you close your financial year in 2019, you will only need to file your corporate income tax by 15th of December 2020, which is the following year. So for every single company that closes the financial year in 2019, your corporate income tax filing will be 2020. Okay, so if you close your financial year in 2020, you have to file your corporate income tax by 2021. Okay, so next, right, keeping accounts. So every company should keep proper accounts. You need to manually tally your accounts, subscribe to accounting software, or hire a bookkeeper. So a lot of people, they do maybe engage external bookkeepers, or like I mean engage external bookkeeper, or they use online software like maybe Zero, QuickBooks, or there's this free app which we did recommend before called Wave apps. Okay, so Zero is actually one of the more popular platforms, and we'll touch on this in later videos as well. Okay, so you have to keep your accounts, and you need to take note of your financial year end. So if let's say your financial year end, for example, is 1st of November every year, then on 1st of November, you have to close off your books for the year. Then the next day, right, 2nd of November, should be a new set of accounts already. Okay, so if you want to hire people, you are bounded by the Employment Act and the Employment of Foreign Manpower Act. So Employment Act for locals, then Employment of Foreign Manpower Act for foreigners. So there are various work passes for foreigners. And if you pay you pay salary, right? The money should be paid out from the company bank account. It shouldn't be the shareholder or the director paying out the salary from their own personal account. You have to adhere to things like paying out CPF and certain insurance which you may need to take up. So if you're a foreigner and would like to work as a local director, you must apply for a valid work pass. So you can actually apply for the employment pass or entree pass. So if you are unsure, right, our site, we have an employment agency license as well. So you can actually contact us, then we will assist you in applying for these employment passes. So if you want to work and live in Singapore, you have to have a valid pass. If not, you can't legally work in Singapore. So these are my contact details, and we'll be holding periodic free webinars. So you can actually go to this website called companyessentialsworkshop.com, and you can sign up at the webinar portion. And yeah, so that's all, and I'll see you in the next video.